All right, let's get right into it. Today is Friday, March 20th, 2026. And if you're tuned into the markets, you already know this is not just any Friday. It's triple witching, one of the most unpredictable, high-stakes days on the entire trading calendar. So with all that potential chaos staring us in the face, what's the game plan?
That really is the core question, isn't it? When the market is just screaming a dozen conflicting signals at you all at once, how do you cut through that noise and actually make a move? Well, to do that, we first have to understand the sheer scale of what's about to happen. It all starts with this one number, 35%. Let that sink in for a second. According to Citadel Securities, that's how many of all U.S. options expire today. We're talking more than a third of the entire market. That unbelievable volume is what pours gasoline on the fire, leading to these huge swings and what can feel like, well, pure chaos. But here's the secret, and this is the key to the whole day. That chaos, it's not random. It's actually the result of three distinct, really powerful forces, all pulling the market in different directions. And if we can understand these three forces, we can build our game plan. So let's break them down. Okay, so force number one is the main event itself, triple witching. The crucial thing to get here is that the flood of trading you're going to see at the open and the close, it's mostly mechanical. It's not new information. It's just giant computer programs unwinding massive positions automatically. So the key is to not get faked out by it. You react to real news, not this predictable volatility. The second force is geopolitical. We got a huge headline that Israel's Prime Minister Netanyahu is signaling a pause on targeting Iran's energy infrastructure. But, and this is a massive but, you have to see the nuance here. This is a partial de-escalation, not some peace in our time moment, not even close. Bloomberg confirmed Iran is still attacking Gulf states, so the conflict is very much still live, which has huge implications for the energy sector. And our third force is more structural. It's happening behind the scenes. The S&P 500 is rebalancing. Now think about what this means. Vertiv and Lumentum are getting added to the index. So now every single ETF, every mutual fund that tracks the S&P 500, they are forced to buy these two stocks. They literally have no choice. And since both are key players in AI infrastructure, it's like a guaranteed injection of cash into the entire AI theme. So, okay, there's our backdrop. We've got the mechanical chaos of witching, we've got this tricky geopolitical news, and we've got force buying into AI stocks. So what do we actually do with all this information? Let's get to the good part and see how these forces create the top 5 conviction trades for today. Here's our roadmap for this next section, a quick cheat sheet. We've got 2 high-conviction bullish ideas, 1 maximum conviction bearish idea on the market itself, and then 2 more confirmed bullish setups. Let's dive into each one, starting right at the top with number 1. All right, kicking us off, our number 1 setup, Palantir, ticker PLTR. The conviction here is high, the bias is bullish, and it's all being driven by a really powerful technical pattern on the chart. Yeah, and this quote from TradingView analyst just hits the nail on the head. The stock smashed through a major ceiling at $155. So now the big test is, does that old ceiling become the new floor? If it holds that level, that is a classic textbook signal for traders looking to buy. So digging in a little deeper, the bull case is built on this confirmed cup and handle chart pattern, which usually signals a big move up is coming. Plus, you've got UBS coming out and slapping a $200 price target on it, which is the highest on Wall Street. On the flip side, the risks? Well, that de-escalation news is a bit of a drag. And with all those options expiring today, there's a very real chance the stock gets pinned, like it's magnetically stuck right around that 155 level. Now for our second high conviction idea, the energy giant ExxonMobil. This one is pretty much a pure play on that complex geopolitical situation we just broke down. The bull case is pretty straightforward. The stock is knocking on the door of its all-time high, and as long as the conflict in the Middle East is simmering, oil prices stay high, and that's just fantastic for Exxon's profits. The key risk, though, is the other side of that exact same coin. That partial de-escalation news is a warning shot. If a full ceasefire gets announced, this entire trade idea goes right out the window, instantly. All right, now for our highest rated setup. And this one's really interesting because it's actually a bearish take. This is a maximum conviction bet against the entire market, using the S&P 500 ETF, the SPY, as a proxy. So the plan here is all about discipline. It involves closing the option that expires today, the March 21st 655 put, and just accepting a small loss on it. Now, why would you do that? to protect the core position, which is a March 28th put that gives the longer-term stagflation thesis more time to actually play out. The risk today is that good news from FedEx earnings and that de-escalation signal could cause a short-term market pop, which is exactly why the strategy is to look past today's noise. Okay, on to number 4. Here we're looking at a potential bounce-back play in a stock that's gotten kind of beaten up, even though it's in the red-hot semiconductor space, Micron Technology. And this just perfectly illustrates the disconnect here. After a really sharp drop, the stock closed around $444. At the same time, a whole wave of analyst upgrades is just getting started. You've got Bernstein, for example, setting a new price target of $510. I mean, that is a significant gap between where the stock is and where at least some on Wall Street think it should be. So the bull thesis is basically that buyers showed up and drew a line in the sand at that 444 level overnight. And those incoming analyst upgrades, which are based on Micron's record-setting guidance, should provide some sustained buying pressure. The risks? Well, the crazy volatility from witching could still throw it around, and the short-term story that everyone's focused on right now is fear about capital spending. It needs those upgrades to change the narrative. Finally, our 5th setup is Occidental Petroleum, ticker OXY. But hold on. Before we get into the details, it is absolutely critical to highlight something important here. The source material for this analysis issued a major correction on this trade, and since we believe transparency is key, we're going to address it directly. So let's be crystal clear about this. A previous report mentioned option strike prices way up at $88 and $95. With the stock trading around $59, those are just flat out wrong. They don't make any sense. The correct trade focuses on options that are near the money, meaning close to the current stock price, something like the April 4th $60 call. Now, this correction actually might create a really unique opportunity. That de-escalation news could cause the stock to dip when the market opens, which could be an ideal entry point. Plus, you have to remember, Warren Buffett's massive 28% stake acts as a kind of psychological floor for the stock. The risks, however, are exactly the same as for Exxon. A full ceasefire is the biggest threat, and you've got to watch out for that crazy volatility at the open. Okay, we have the macro forces, we have the specific trade setups. Now, let's put it all together. How do you actually navigate the session today? This is the execution plan. Here's the game plan broken down by the clock. Step 1, 9:31 a.m. right at the open. Close any options that expire today. Just get them off your books. Then, you start monitoring those key levels for Palantir and Occidental. Step 2, 10 a.m. For Micron, the key is patience. Wait at least 20 minutes to see if it holds that key 450 level before you even think about acting. Step 3, all day. You are on high alert for news of a full ceasefire. If that headline drops, it's the trigger to exit half of your energy positions immediately. And finally, step 4, 3 p.m. This is absolutely critical. Do not get sucked into the chaos of the final hour. That is pure witching noise. It is not a real signal. So let's wrap it all up with the 4 essential rules for navigating today, the triple witching rules. 1, close all options expiring today right at the open. 2, ignore the chaotic noise at the beginning and end of the day. It's not real. 3, respect the ceasefire rule. A full ceasefire means you sell half your energy, no questions asked. And 4, wait for your confirmation signals. Don't jump the gun. Wait for Palantir to hold 155. Wait for Micron to hold 450. Look, with a clear plan, even the most chaotic days can present incredible opportunities. The only question is, are you prepared to execute? That's your explainer.